Hello, today is April 3rd, a Friday. Some more crazy price action. Don't expect that to end anytime soon. This is normal price action during a bear market, testing key levels, and we'll go from there. I want to touch on a few housekeeping items. This is for clients specifically. First of all, if you're planning on contributing to 2019 Roth IRAs, traditional IRAs, or just planning on adding money in general during this dip, please understand that everybody is trying to work as fast as possible. The extension did get moved to July 15th. However, if you're planning on doing it and have the money now, you do want to try to do this now. Don't feel bad about calling me on a weekend. In fact, I would prefer doing those things on the weekend where I need to be trading during the week. So please get those in if you can. It's a lot easier to do over the weekend than it would be. But understand that the Patriot Act, if you don't already have your bank account linked, is going to take 5 to 7 business days. And because many of these custodians are working from home, it's going to take longer. So we want to definitely get things linked as soon as possible. So if you don't have an account open, don't have the account linked to the bank, we need to get those things. You can't wait till last minute, or it's just not going to happen during this coronavirus pandemic issue time. So just want to be realistic with you there. If you're planning on doing it, I expect the next month to see some down movement. Don't wait on it. Get it in as soon as you can so I can pounce on the opportunity. If you call the same day the market's down 5%, it's not going to happen. There's no way we can make that happen in time. So just want to be realistic about that. Some of the stimulus package and new rules, just kind of want to go over real quick. Unemployment provisions, an additional $600 weekly benefit will to those collecting unemployment benefits through July 31st. Kind of interesting stuff here. Just going through this to try to help as much as possible. Here's the main chart. This is specifically called a recovery rebate. Technically, it's a refundable income tax credit. The key is that it's going to be based off your most recent filing. So if you already filed in 2019, it's based on that. If you didn't yet, it'll be based on 2018. And the check will be sent directly to the qualifying individuals. Here's the chart. If you need to see a chart, this helps, I think. Married filing jointly, the phase out is 150. Keep that in mind. The phase out completed fully is 198. So keep that in mind. One child versus 2 children. All of these things are important to keep in mind. So let us know if you have questions there, but hopefully this helps understand some of the expectations. This was really interesting and kind of surprising me, to be honest with you. RMDs are not required to be taken for 2020, so if you don't need the money, don't take it. Keep it in there as long as possible. That's the summary there. Student loans, some other interesting information there. So we're going to move into the charts, but wanted to make sure I got some housekeeping items out of the way first. And now we are going to move into the chart. So hopefully this helps. I'm going to make this a little bit bigger. There we go. So a lot is happening. A lot is happening fast. You're like, Jonathan, it's 3:17 in the afternoon. What are you doing? Why aren't you trading this? I told you Thursday. I knew today would be nuts. Not seeing activity that these are not levels that I want to play around with. I think people are toying with levels and could get spanked pretty hard here. I am notorious for being overly patient and pouncing at a more realistic time. I don't care if I miss out a little bit to the upside. There very well could be some upside here, but I do unfortunately believe that there is more downside before there is upside. So again, in my mind, in basic terms, do I think 2,700 happens before 2350? And honestly, 2350 I think is going to happen before, based on not just my opinion, but most, unfortunately. Most want to see the key levels, and we updated this, so hopefully this helps. Right now we are just range bound. we're basically following the 10-day moving average, trading between there and the 20-day moving average, the gold line here and the purple line here. Kind of interesting. This is the range, the 24.50 to 26.30. It's still a pretty big range, but that's the environment we're in, people. So as long as 24.50 holds, I wouldn't get too bearish yet. But as it gets closer to this level or 2,700, I'd start taking profits, which is what we've been doing. We have a lot in cash. So rarely do I put this much in cash, but I do believe the time to do that is where I sold, and I sold much higher than we are at right now. So we have a little bit of a buffer there, and I feel okay about that. We have 95% in cash right now because of the levels that I got out in earlier. I'm okay if we test 26.30. I'm okay to miss out on a little bit of that. I just, unfortunately, this is setting up to be a classic bear market. Relief rally, the W price action is a little concerning. Again, it very well could go back up a little bit, maybe 25.50 again. I'm keeping some invested, and understand it's going to invest like 15% is invested despite there only being 5%. If you need me to go into a more detailed reasoning why that is, we can talk about that offline. But I mean, this seems to be really setting up to be W price action and retesting the lows. And many are hoping for an even lower entry below the 21.91. Here's what I can tell you. Here's my plan and mindset. I will not keep 95% in cash to here. Okay? That is stupid. You're going to be mad at me when it goes lower, and it probably will. But I am not going to miss these levels. Okay? In the next 6 months, you'll be glad that I did. Especially years from now, you'll be like, man, I hated him for 2 weeks, but I'm glad he did that because it was good price entry. But I'm going to make sure I scale it at these different levels all the way down. If we go below, I'll still have some in cash. That's okay. It's not going to be a fun picture. I'm just telling you that up front. It's not. I don't think it's personally my job to comfort you necessarily, but be realistic. I want to comfort you and say that even if we got in now and six months from now, I do think the number is higher. So that should bring some comfort. However, I'm going to trade based on sentiment, how the market is behaving, how price action is reacting, what the Fed is doing. A lot of this does not point to good things, and I have to be real about that. Again, I have 5% invested in case we go a little bit higher, and this is real time. This is every 15 seconds is updating. So this is a key level, the 24.80. 24.80, if it doesn't hold there, we'll go down to 24.50 again. 24.50 is a price that if it goes below that, I can tell you people will probably short the crap out of it. I'm just being honest with you. But I am traded accordingly. So that's where we are different than many. There's nothing wrong with buy and hold, and historically you'll be fine. But if I can prevent some of this dip, I'm going to do that. That's what I have promised in my website. That's the way I want to trade. And historically that has beaten the market by doing what I'm doing. Just by being a realist at times to say, hey, huge dip, got the relief rally of 20%-ish, 17 to 20. Take some gains here. And as we went down and went up higher, I took some more gains. So has it been perfect? Absolutely not. I'm never going to be. But these are the levels that I'm watching. And on the way down, I will add. I'm telling you again, because I know I'm going to get some concerns when I'm buying here. And you're like, but I thought you said we would go lower. Yes, but if something happens, we get a vaccine, if a pill starts working, cases start to reduce in the number. Right now, I don't foresee that happening for another 2 to 3 weeks because we're finally starting to test people. So case count is going to increase, expect it. But it's not just rocket science to say, hey, we're going to test the lows. I think you got to be careful here. not adding in between these levels systematically. So I'll be honest with you, I'm not going to try to time it perfect. As we go lower, I'm going to add 10% on the way down at these different levels. And if we go even lower, fine. I have plenty more to add. We are in very good position. Has it been perfect? Absolutely not ever going to be. But if I can save some capital, I'm going to do that. And that's my commitment to you. We do, as previously mentioned, we do believe cash is a position. As I've proven time and time again, I will be honest and show you a chart on gold. I don't hate the look in gold, but when there's a sell-off, everybody just sells everything, and it doesn't matter what it is. Sure, bonds might do better than other areas, and gold might do better than other areas, but as we've seen before, they've gotten drilled as well and have rebounded faster. But I want to show you the next chart. We'll get moving a little faster here. Why is the 2350 level important again? Again, this is to the December 2018 level. Don't be surprised if that happens in the next week or two. Would not surprise me at all. So I wanted to show you a longer term perspective to show why 2350, if we go below the 2450, that it's going to go there quick. So don't lose your mind when that happens or if that happens. Gold, as previously discussed, I mean, when the sell-off happens, so if we go in the S&P 500 below 2450, I think it's going to be a similar case where everything sells off. Now, we are seeing some stability, which is good. I got to be honest about that. Not everything is horrible, but I think people are going to pull the plug even if they shouldn't, and therefore I'm getting ahead of it. So the plunge in gold rebounded. Is doing quite well here. We actually tipped people off last week to say, hey, this could be really interesting here. Not interested yet. It will probably, and over the next couple of months, do quite well, to be honest with you. So we'll probably add some soon. Relative strength index above 50. We like that. I mean, that's good to see. We're seeing some strength there. Wouldn't be surprised if I add a small amount there not too long from now. TLT, how is that performing? Again, that's a 20-year treasury bonds. Again, up here I said be really careful because even if we get a sell-off, it's going to tank. That happened. It's rebounded well, and kind of the same situation as gold. Don't be surprised if everything sells off. If this goes lower, might be an area that rebounds faster than some other areas. But again, relative strength index above 50, that's not a bad thing. I'm going to take a quick movement back to the S&P 500 to kind of show you where we are in relative strength index on the S&P 500. This is typical price action in a bear market and why I was taking gains. You oftentimes test near 50 after recession-like times. Bear markets get there and go down. This happened again. This is actually bullish, but I think it's going to curl over and run out of steam, unfortunately. So I'm just being candid with you and being real with you. Clients, you should not be concerned because we have 95% in cash. And again, I'm okay if we miss a little bit to the upside because I think the bigger midterm couple weeks move is lower. So I'm going to trade accordingly. The last one is the Volatility Index. Where in the heck are we at now? Again, we tested as high as 85.47. Not fun. It is getting back to more reasonable levels. We opened at 51. That's definitely an important level, right around 50 to 52. It's gone below that. Again, usually what happens in a bear market is the VIX spikes. Fantastic. The market rallies back. You might get a little bit more spike in the VIX, but it is so high right now. The VIX could actually go lower, fear reduce, and the market actually go down with it, which is historically what has happened. So just because the VIX is going down does not mean the market will do well. So understand that during these times, you got to be careful just watching the VIX or the fear because it's already so elevated that people are going to be like, I'm not sure how much longer I want to stay in here to provide capital to add back on the market upswing. So there's a lot of risk here right now, and that's why you might start to see, despite it being an ugly day in the market and the VIX being down as well, that is not uncommon in bear markets. And finally, why have we been going up? Well, we got a nice relief rally Thursday. I shouldn't even call it a relief rally. It was basically, it's called an inside day, where Wednesday was ugly. We rebounded strongly. This is struggling. Sorry about that. In short, crude got a nice rally. It was over 20 to 30% over the past few days. And as we've been saying, hey, if crude gets a bounce, the whole market probably will follow suit for a little bit, but it's so bad right now, I don't think it's going to. It did get the relief rally. I shouldn't call it that. It got the bounce following oil, and is now struggling to follow oil because the market basically is not going to fall for it's not falsifying the production, but really all they're doing is cutting production, which algorithms are going to catch on to that pretty quick. So a lot of times algorithms are tied to crude when it is this low. But now that it's so much in the news, I think that's going to change a little bit. So I hope this helps. Again, we're trying to be realistic with what we're seeing. I'm going to end with this. We will get through this. Long term, it'll be completely fine, and you're going to regret not getting in. And so, again, I have to systematically add, regardless of whether you think the world is going to end. This is going to happen in the next month. I'm telling you right now. Prepare for it. Don't lose your mind. If you can't, don't watch. Get outside. It's nice outside right now. Thank goodness it's not winter in Ohio. But I'm telling you, in the next 2 to 3 weeks, we are going to be adding hard, regardless of whether you think this is the Great Depression or not. Okay? So I'm giving you the precursor to, you might not like me at those levels, but I'm going to systematically add so we get in for sure at lower pricing. Doesn't matter what's going on in the news when it's that low. Fundamentals are going to be thrown out of the window right now. We will get back to a time where fundamentals matter. But right now, you're going to see in this cycle, corporations cut rates, reduce their expectations, and it's going to be ugly probably 2020. But the market will rebound before the coronavirus is even resolved. I'm just telling you that right now. It might not be in the next month or two, but we will be okay. And I'm going to systematically add, I think in the next couple weeks, case count will peak. It could be the end of April. And that's where I got to say, in the next 2 weeks, I think I got a little bit of a buffer. But after that, after 2 weeks, I got to start adding again. I'm just telling you. So I'll continue to look for opportunity intraday. I am having some success there. But we got to be really careful here. Today, like today, Friday, like today, this is not an environment where I want to get caught. Earlier today, the high was the 25.39-ish. It tested the 25.40 range, which I was telling in the morning, hey, this is going to happen. So again, not something I'm willing to take the risk on at this point, because I do believe the move is lower in the next couple weeks. So hope that helps. Stay disciplined. Again, do not pull the line on me where you say, I got to pull the plug at X. That is the worst investment decision ever, because we have 95% in cash, and I am going to add on the way down. You're not going to like me for maybe even a couple months, but you will like me eventually. So appreciate you guys. Appreciate your trust. Understand that I'm trying to give you an understanding of what will likely happen and my game plan to do it. So don't lose your mind when it happens. Get outside, let me manage it, and pray for my soul. Amen. See you guys. Have a great weekend. Bye.